Good morning, traders, and welcome to today's daily analysis, which is the 13th August, Tuesday. Let's start with US dollar index. It traded steadily above 103 on Monday, with market sentiment relatively calm as the US stock futures and the 10-year Treasury yield remained stable. However, the dollar index recent bullish momentum around 103.5 seems to be fading as the global markets recover from recent turmoil. This week's US CPI inflation and retail sales data will be crucial, as the market expects the Fed to cut interest rates by 100 basis points this year, with a 40 basis point cut anticipated in September. If the data disappoints, bets on the rate cuts could increase, potentially pushing the DXY and US Treasury yields lower. Conversely, stronger than expected data may reduce the likelihood of rate cuts, supporting the dollar and yields. Ahead of the CPI data, the DXY has slightly rebounded from support at 102.78, aided by the lower line of the descending channel and an oversold RSI. However, this rebound lacks strength as market sentiment remains bearish. Since peaking at 106.15 in late June, the index has been under pressure, dropping below its 200-day moving average at 104.21. If it breaks current support, it could fall to 102.86, a key Fibonacci retracement level, and possibly to 102.4, the lower line of the downtrend channel. Then for oil prices rose to the fourth straight day on Monday, reaching a recent high of $80.44, driven by supply concerns amid Middle East tensions and positive economic data from China and the US West Texas Intermediate (WTI). Crude hovered around $77.4 per barrel during the Asian session. China's CPI for July rose 0.5% year-on-year, beating expectations and further supporting oil prices. If the oil prices continue to rise, key resistance levels to watch are $78.17, 200-day moving average, $78.41, 50% Fibonacci retracement, and the recent high of $80.40. A break above $80 could push prices to $81.74, 76.4% Fibonacci level. On the downside, support levels include $76.03 and $75.08. The 14-day RSI has also moved into positive territory, indicating potential for further gains. While for gold, the prices continued to rise on Monday, reaching $2,473 after a recovery late last week. Geopolitical tensions and expectations of multiple Federal Reserve rate cuts this year supported the increase, though a stronger dollar briefly pulled prices down to $2,426 during the early Asian trading. Despite the dollar's impact, the ongoing Middle East tensions are likely to keep the gold prices supported. In the medium term, the gold outlook remains positive, with any declines expected to be short-lived due to favorable macroeconomic factors. The investors are divided on the size of the Fed's next rate cut, with upcoming US inflation data potentially influencing this decision. The gold faces strong support around $2,430 and has recently broken the resistance at $2,450 and $2,452.9. If prices stay above this range, the next targets are $2,477.7 and the historical high of $2,483.7, with a potential move to $2,500. Conversely, a drop below $2,450 to $2,452 could lead to a decline towards $2,430. And then for our currency pair, AUD/USD regained ground early this week, rising above 0.66 after Friday's losses, helped by the uncertainty around the US dollar. The pair strengthened around 0.6565 during the early Asian session on Monday. Support for the Australian dollar came from the hawkish signals by the RBA and higher than expected inflation data from China. However, the Middle East geopolitical tensions could limit further gains. The RBA held interest rates steady at 4.35% for the sixth consecutive meeting, but Governor Michelle Bullock warned of potential rate hikes if inflation risks increase. This hawkish stance, along with China's rising CPI, supports the Australian dollar, though concerns about weak demand in China may cap the upside. On the daily chart, the AUD-USD has encountered strong resistance around 0.66, aligning with key moving averages 20-day at 0.657 and 100-day at 0.6601 and 200 at 0.6595. Support remains firm at 0.65 and 0.6453, which is the 23.6% Fibonacci retracement. The RSI is neutral around 46, indicating balanced buying and selling pressure. If the pair breaks above 0.66, it could target 0.6625, 61.8% Fibonacci retracement, and 0.6691, 76.4% Fibonacci retracement. And that is all for today's daily analysis. Like and subscribe for more daily analysis.